The money markets are currently discounted less than, as you said, 50 basis points of rate hike this year. We're looking for the Fed to raise interest rates, or the Fed funds rate, by 75 basis points. So at least in the near term, this upward revision in interest rate expectations, closer to where we expect the Fed funds rate to be by the end of this year, will support the US dollar, at least in the first quarter of this year.
Right, so
employment conditions in the US are...
Okay, so 75 means 3 hikes, right? That maybe not aggressive,
That's right.
as aggressive as the Fed's 4 dot plots. What does that assume, though? Does it assume that we've seen the bottom in China, that things aren't going to get worse, RMB is not going to continue losing altitude, or conversely, does it mean that the U.S. recovery is going to be stronger than we actually think or expect now?
Well, I think, first of all, in terms of the emerging market outlook and the Chinese economic outlook, in the short term, we're bound to have a bit of turbulence as policymakers are slow, especially in China, to react to the financial shakedown and the slowdown, at least cyclically, in China's economy. But and in terms of U.S. economic activity, well, it continues to improve. The latest employment numbers were very strong and consistent with an upward revision in U.S. interest rate expectations. Now, as you correctly mentioned, going forward, however, the strength in the U.S. dollar and and high U.S. interest rates, or an increase in U.S. interest rates, will start to weigh on the U.S. economy. And we expect this transition to happen or to unfold maybe later or in Q2 this year. But in the meantime, brace for further U.S. dollar strength, especially against the commodity-sensitive currencies.
Which is why you've got you're calling 65 on the AUD. Is that right?
That's right. So we're looking for the Australian dollar to fall to 65 cents versus the US dollar by Q1 this year, largely because of unimpressive global growth, the shaky financial conditions, lower commodity prices, which will put further downside pressure on Australia's terms of trade, and that will have a negative net income or negative wealth effect on Australia's economy. So we're still looking for some downside here in the Australian dollar, and we prefer to sell any relief rallies versus the U.S. currency.